moving on to the second CEO barbecue of today's Real Money Talks episode, for which I am going to have to travel to Nevada again, where I seem to be spending quite a lot of time recently, and maybe for a good reason too. And it makes sense, actually, given its name designated as the Silver State and the state of the silver market, and it also makes sense. You see, you caught my, okay, whatever. And that's exactly what I'm doing today, though. I'm looking for silver, but luckily not alone, as I'll be joined by Andrew Pollard, the CEO of Blackrock Silver Corp, a silver exploration company listed as BRC on the TSX Ventures Exchange in Canada, where an average of about 470,000 shares trade each day. I also see a 52-week high of about 40 cents and a 52-week low of 19 cents. Now, the company just closed a $5 million private placement with Eric Sprott, so the share registry might look a little different by the time you're watching this. But the numbers that I could pull out were 272 million shares outstanding. And with today's $94 million market cap, that means BlackRock is trading at 35 cents per share, so close to that 52-week high. In addition to the 272 million shares outstanding, there are some options and warrants, bringing the number of fully diluted shares close to 315 million. But again, that would have changed by the addition of about 15 new million shares from Eric Sprott's financing. This financing puts Eric at just over 5% ownership, by the way, and prior to the financing, about 60% of the company was already in the hands of institutions and high net worth individuals, with management owning only about 4%, so a little less than that, I suppose, now after this financing. The last officially filed financial statement on Setter Plus, which shows me the numbers as of July 31st, 2024, and so I assume does not incorporate the addition of this $5 million from Eric Sprott, does show me about $11 million in current assets on it, most of which at the time, $10.5 million to be specific, was in cash and cash equivalents, with, of course, some prepaid expenses and some account receivables on top of that as well. Total liabilities sat at just under $1.5 million, most of which in current liabilities, so no long-term debt, and there's really just a small lease liability on the long-term side. And on the current side, about $1 million of account payables is what makes up most of the company's liabilities. In terms of operating expenses, the 9-month period that ended on July 31st this year costed BlackRock about $2.5 billion, which divided by 12 gives me a G&A of $280,000 per month. The largest element of that spent was consulting fees, director fees, management fees, all kind of combined, which represented about 51% of the total administrative spend. Again, combined though. About 11% of the money went into marketing and communication, and the remaining 40 or so percent is represented by various smaller expenses, including stuff like insurance, legal, offices, regulatory, filing fees, and stuff like that. As to exploration and evaluation costs, note 6 of the financial statement says that the 9-month period cost about $2 million, which is an average exploration expenditure of $220,000 per month over the last reported 9 months. The largest part of that spend, so about 64% of the money of the $2 million, went into drilling itself, with another 30 or so percent going into geology and consulting, with various other smaller expenses making up the rest. So in summary, we have $280,000 a month that's going into administrative costs and $220,000 that's going into the ground, for a total average monthly cost of about $500,000, leaving us with an exploration to administration ratio of about 0.8 to 1, meaning about 44% of the money went into the ground and about 56% went into administration. As always, though, please understand that this financial statement is nothing more than a snapshot in time. In this case, it is specifically at the end of July of this year, and it simply shows you what the finances looked like on that exact date and nothing more. Finances, though, are a fluid thing, and math is also hard if you're me, so I could be making mistakes in my reading of them. It is imperative that by the time you're watching this, you visit the company's website as well as setterplus.ca and look at the most up-to-date numbers yourself. Make sure you're getting the full picture. Now, for BlackRock, that picture, or that full picture, is fully focused on the Tonopah project in South Central Nevada, within the Walker Lane Trend and within the historical Tonopah Silver District. BlackRock recently exercised an option to acquire 100% of this project, and so currently they control all of the 1,400 acres or 560 hectares of land, give or take. Just a quick word on the district here before I tell you more about the project, by the way. But this is a rather old, historically producing, high-grade, low-sulfidation epithermal district that was first discovered in the 1900s by a local who was called Jim Butler, who was a prospector, but he was a very angry prospector because one day apparently his mule ran off and he tried calling it back by throwing a rock at it, as one does apparently. But so that was a very heavy rock, and so he decided not to throw it and assay it instead. And that's what the legend says was the discovery of this district. It's up to you if you want to believe it or not, but it is an interesting story. Didn't take long for the Tonopah mining district to get officially organized, and by the early 1900s, there were a few operational silver mines and a booming town sharing its name with the district. The district then became that important that it basically single-handedly saved Nevada's economy during the early 20th century. That was a very tough time. And so it also helped link Tonopah with the civilized world, if you will. And at its peak, the district produced up to 14 million ounces of silver per year, worth close to $500 million at today's spot prices. By the late 1920s, though, a lot of the highest grade and kind of easy stuff that was at surface had already been mined. The Great Depression had hit. Then World War II came along not too long after that, and most of the mines here closed rather quickly into it, with various smaller operations remaining into the 60s and the 70s, but nothing too big. So why even bother with it now? Well, that's a good question, and that's hopefully something I'll get to ask later on. But Blackrock has already found a bunch of silver, although it is underground, and the 2023 updated MRE shows about 100 million ounces of silver equivalent in the inferred category. The split, by the way, will depend on the prices of the metals at the time you're watching this, but at today's prices, this is close to a 50-50 split between gold and silver with, well, a little bit more of a gold bias, actually. The recently completed PEA on the Tonopah West project, though, was done at $22 silver and $1,850 gold, and it shows a production profile of 8.6 million ounces of silver equivalent for almost 8 years at about $12 AISC after a $170 million initial capex and resulting in an after-tax NPV of $326 million and an after-tax IRR of close to 40%. Blackrock, though, wants to find more gold and silver, and with a fully funded 20,000 meters in 50 drill holes program, they believe this resource expansion and conversion program might help them do exactly that. 40 of those holes, though, are, just to note, are expected to be infill drilling on about 25-meter centers, meant, of course, to convert some of that 100 million ounces of inferred silver equivalent that I told you about earlier into measured and indicated. The step-out or expansion drilling will thus be only 10 holes, and it's aimed at linking the DPB and NW, so Northwest Resource areas, together with all of this. So the infill and step-out drilling expected to be completed by December of this year. Here's the other curious part, though. The north part of Tonopah has come up with some lithium in the drill bit across a 7.2 square kilometer area. So what happens to that is also hopefully something I can get an answer on later on, but I'll try to keep it short here. Well, I think that train's kind of left the station. Tonopah is not the only project in Blackrock's portfolio, though. Silver Cloud is the other one. It's based in the north, in the north of Nevada, but kind of north central Nevada. It's about 12,000 acres or 45 square kilometers, so it's not huge, but it is located on the northern Nevada Rift, so it is close, or it's actually adjacent to Hecla's Hollister mine. Been a while since Blackrock drilled it, though, but when they drilled it about 2 years ago, there was a narrow 1.5 meter intercept of 70 grams gold and 600 grams per ton silver in the core. So something might be cooking there as well, and hopefully I'll get to hear more about that from Andrew later on. But to actually get to listening, I might have to shut up. So I'll kick off the actual interview here with CEO Barbecue. Obligatory first question, Andrew. Who are you, and why should I trust you with my money?
Well, that's an existential question I've yet to answer myself in terms of who am I. But listen, I came into BlackRock originally in 2019, not out of inspiration, but out of desperation. I was a shareholder in the company leading up to that for about a year and a half, putting a lot of money in, bringing a lot of my network in the mining industry in. And frankly, I was appalled at the performance of the old team. It was, from my perspective, it looked like a typical lifestyle company, a lot of money being spent and nothing actually being done. So, my background leading into this, I didn't just become an investor overnight. I've been working in the mining industry since I was 20 years old. I built the go-to executive search practice in the mining industry from the age of 20 till when I took over this company when I was, I guess, 34 years old. And, for about 14 years there, my business was predicated on one thing: management matters. So, I was working behind the scenes and in the boardrooms of new deals, turnaround stories, existing companies with retiring management. And, I built over that 14-year period a little black book of some of the highest caliber people in the industry, people which, I made my living off putting into companies and helping them right the ship. So when I came into Blackrock, watching it for about a year and a half, just wither on the vine and sort of circling the gutter, I saw this not so much as a project level issue. I saw it as very much an issue that, let's see if what I've been doing for the last 14 years is bullshit or not. And let's see if I can come in and really just by making a few small changes at the top, reignite the company, give it a purpose and move the project forward. And that's what we did. I joined May 2019. It was $1 million market cap and 3 cents was the bid. And that's if someone was daring enough to put the bid in. And within about 2 weeks, I just went about doing what I know best. Bakers bake, butchers butcher, and I built teams. So my first hire coming on, I was just going to join as an interim CEO. I certainly didn't think that we captured the sort of lightning in the bottle that we did, but I just went about building a team worthy of the company, worthy of the investors' attention. And my first hire was bringing on a guy by the name of Bill Howell. And Bill, he came on as executive chairman. I do all the market related stuff so that I can leave him to do all the project stuff. And Bill was one hell of an acquisition. Bill used to be head of exploration for Placer Dome. Well, all through the 90s, up until their takeout by Barrick in 2005 for $10 billion. Placer was known as like the technical exploration group. These guys were world renowned. The people reporting to him are the people running companies now and taking very prominent roles. And Bill was the top of that food chain. Lives in Nevada, found over 100 million ounces of gold in his career. And I got him involved because our Silver Cloud project, which was the original project for the company, the flagship, was actually a discovery of his that he made with Placer in the early 2000s. But it's greenfields, and in the early 2000s, the major mining companies had lost their budget. So, nearly 20 years later, I gave him the chance to, get handed the keys again. And, the rest is history. About, making some minor adjustments over the next few months, we started changing out the board members, and we built right now we've got $1 billion board. I brought on a major mining company explorationist to head up a micro cap company. 6 months after he joined, he brought us the Tonopah opportunity, which we're going to talk about. And, I guess 13 months after I joined, so we went from 3 cents to $1.60 on huge volume. And that was after our discovery hole at Tonopah West. And, it's been a wild ride along the way. Here we are 4 years later after putting out our first drill hole in Tonopah. We've advanced it to a PEA status. And as you mentioned, I mean, this is going to be one of the lowest cost silver miners in the world at 1196 all in, and it's going to have meaningful production. This project, if we can move it forward the way that the PEA outlines, will be the second largest silver producer in America. It's going to add 12 to 15% to America's domestic silver production. So, there's a lot more work to be done. We've created a lot of intrinsic value, and right now, I think we're at that perfect point where investors can see there's a real disparity between what we've got in the ground, the intrinsic value we've created, and how we're trading. And, you mentioned Eric Sprott coming in. He came in the week after we just put out our last PEA, which established the project with these impressive credentials. And one thing I'll correct you on, you said he owned 5%. No, he owns 15% of us. He's the world's biggest silver bug, has put more money into us this year than any other silver company out there. And that last financing he did just a couple of weeks ago was done above market and no warrants, no half warrants, no nothing. So, um, he's making a big bet on us, and I think he's going to be proven right in the not too distant future here.
You make a good point on Eric coming in and owning 50%, 15%, 1.5. And the main reason why I ask you that question about why should I trust you with my money is because I want to understand how much skin in the game you have. Because it's easier for me to trust you with my money if you trust yourself with your own money. And so with BlackRock, insider ownership before the Eric Sprott financing was only about 4%, as I mentioned. And there also hasn't been much insider buying recently in the open market. So why is that? And is there a way for you or a plan for you to work on ramping that up and increasing the insider ownership here?
Well, listen, generally the companies where their insider ownership is huge is the companies where they've been giving founders rounds at 0.001% shares. This wasn't a new deal. When I came in, there was no seed stock. There was nothing. I came in as a pissed off shareholder. I hold about 5 million shares plus or minus. And all of those have either been bought in financings along with other market participants or in the market. This is my only focus. So I'm not diverting to 5 different companies. I'm not collecting paychecks anywhere else. This is my entire with me. We're either going to find a way or make a way because I'm all in here. There hasn't been much insider buying this year because we've got a very gracious government here in Canada that keeps changing the notion of what my fair share is. And as I'm not creating new deals or taking paychecks elsewhere, I'm all in. But you might see over the last couple of years, if you take a wider range look at that, I put $300,000 into the markets and into financings in 2023 and 2022. So I'm a chef that eats his own cooking, and right now, frankly, I'm this. My analyst wants to get me to a mental institution in terms of how much of my actual livelihood depends on this going. But once again, I'm a chef that eats his own cooking, and I'm about as exposed to this as can possibly be. And I've ridden this all the way up. Listen, as I said, when I joined, we were 3 cents. A year later, we hit $1.60. How many shares did I sell? None. I see the big picture here. I'm more excited now about what we've got than I've been at any other point in my career because, we were overvalued based off just speculation on our first drill hole. We hit our all-time high on one drill hole. Along the way, we've been fighting the market ever since. When we hit that first discovery hole, that was right as the world was opening back after COVID. Silver had run from $12 to $30 in the span of like 3 months. And we put first drill hole out at the very peak there. And effectively, the GDXJ went down for like 2.5 straight years. We faced the most aggressive rate hike cycle in modern history on a percentage basis. And along the way, yeah, we were one of the most active explorationist groups in the world, certainly in the silver space in Nevada in 2021 and 2022. We did like 120,000 meters of drilling. So I'm in it from Jump Street here, and I want to get either taken out or cash flowing. But either way, where we're at $100 million for what we've got, yeah, this is as good of a setup as I think we've ever seen. And the market's finally paying attention. We're up 40% since we put that PA out. And I think we got a lot of room to run relative to how my peers are trading.
What's your average cost of capital? Do you know that off the top of your head?
Oh, probably like 25 cents. I had a big shareholder. I bought a lot, when my first investment into the company before I took over, I put $100,000 in at 10 cents. That was before they really had anything, so to speak of. I put $100,000 in a couple of years ago into a 50-cent financing we did. So that obviously changed the cost base. And then along the way, I bought a lot in the market and exercise options and stuff. But I'd say my average cost base is somewhere in the mid to high 20s.
Okay. Given that you didn't put the company together at first, I don't assume you own any royalties in the project yourself to your
No,
personal name or anything like that.
no. This was Tonopah was a consolidation that, didn't even make itself known until really COVID was emerging. The world was shutting down. And it was a David versus Goliath acquisition for us because there was lots of mid-tier companies that were in the bidding, but they couldn't get down to site and they couldn't make decisions quick enough. And then do you remember what happened between, say, February and April of 2020?
Mm.
The markets just went into meltdown mode, and we scrounged all the cash we could to make to sign this option deal. Our first payment was $250,000. Our first drill hole cost about the same. And on the back of that, we added about $100 million in market value on that first drill hole because it was a proof of concept. And that proof of concept was, these old timers didn't stop mining in this district because they ran out of gold and silver. They ran out of district. They stopped mining because of some technical issues of the day and the Great Depression. And we've proven that theory, right. We've drilled out 4 kilometers of strike. This district, you touched on the history, but this time 100 years ago, this was known as one of the richest places on earth. Its place in history, not only in Nevada, but it's almost like Forrest Gump in the different like touches with history it's had along the way. When it was, in 1906, when San Francisco burnt down because of the Great Fire, the riches coming from Tonopah helped rebuild San Francisco. In the 1920s, after London had been bombed out during World War One, the silver from Tonopah was called. It was sold to the Bank of England. It was called the peace dollar. It helped backstop the currency of London, and all of that silver came from Tonopah, and that helped, just backstop their currency. I mean, there's a lot going on there, but this opportunity, when we first got our hands on it, the mid-tiers who were vying for it, they knew the potential, but most market participants didn't believe us. They thought it was too good to be true, which is why once we hit, our first drill hole hit 30 meters of a kilogram per ton silver equivalent. That's why the valuation moved up so aggressively. And here we are 4 years later, this is going to be a big time producer. So, it's been a wild ride, but this is very much a deal that was generated not by people first, and that's the focus I took in coming in here and building a company. Companies are generally built around a project, or afterthoughts are given to team building. But with me, I wanted to bring out the heavy hitters, and that was the narrative early on. I'm going to open up my little black book and see what we can do. And you take that team-based, people-based approach, you give it 6 months, you let it cook a little, and boom, this is one of the only silver discoveries of the last decade, easily the highest grade one amongst my developer peers right now. By our next closest high grade peers, 55%, we're 55% higher head grade than our next closest high grade story in the industry. So, the train's leaving the station, and now we're trying to get the market back with a heavy duty drill program, the first one in years.
I want to talk about that last part where you talk about the valuations, because when I met you at the Precious Metal Summit in Beaver Creek, you showed me a slide where you had the value. It's a valuation slide essentially. Though it's an EV to ounces in the ground, which is not a metric I have a lot of respect with. I still kind of had the idea of, okay, you compare yourself to these people, to these companies that have outperformed you. And also when you compare share prices with some of these names like Vizsla or Dolly Varden over the last 52 weeks, your stock, although up, has lagged them over the last 52 weeks again. So what do you think that's due? Why are you not getting the valuation that you think you deserve?
Right. Well, I see that coming back in a big way. What I do know is that when we've been drilling in the past, because of the grades, we've always been one of the top performers in the industry. We've always commanded either number one or number two highest EV to ounce in the ground ratio. But we stopped drilling in mid 2022, maybe early. I think our last drill hole was at the end of 2022. So we took our foot off the gas pedal there simply because the rate cuts were coming in, the tides were going out, drill results weren't getting respected in the market anymore, and I didn't like my valuation. But we went, when we started drilling this project in 2020, it was June of 2020, we only set out to do 12 drill holes. And when we hit, we got a call from Eric Sprott the next day, and we did a $7.5 million financing. And then we never stopped drilling for about 3 straight years. We did something like 150,000 meters all in when you include all the drilling we did to the northwest there too. in that 3-year time period. And we moved so quickly and we captured a lot of attention because it's easy to capture attention when you're putting out constant news releases and drill results and all that. When we took our foot off the gas pedal last year, it was because, we were drinking from a fire hose in terms of all the data. And when it's coming at you that quickly, it's hard to just sort of make sense of everything. You're always focused on moving the rigs, or you're not really getting an understanding of how all these random intercepts in space relate to each other. So what did we do last year? We put our head down. We took all the drilling we did post our maiden resource, which left us with 42 million ounces in maybe 2022. And we decided to incorporate that, take a step back, try and see the forest for the trees. And we put out a resource last year at the end of October, which 2.5x our ounces. We went from 42 to just over 100 million. We increased the grade. We showed a straightforward path to adding substantial more upside, just given the way we drilled it out, with these big gaps along a vein corridor, bookended with mineralization on either end. But we didn't have anything to follow it up in terms of, you need a reason to keep people's attention. And we didn't have money to do the drilling. What we wanted to do is, we're a very earnest group. We've put out 3 technical reports in 4 years from our discovery. There's not a discovery in the industry, a vein hosted one, that has moved from discovery hole with 0 drill holes in a database to a PEA as quickly or cheaply as we have. So we show our work every year. And what we decided to do once we had that resource out was take a look at, drilling out ounces is all well and good, but you want to see how that relates to becoming an actual mine. You need to know what kind of mine you're going to be, what sort of an operation, where are you going to go first in your, where's the decline going, where's this, where's that. So, you mentioned our financials, from the trailing 9 months. Well, what have we been doing the last 9 months? We weren't drilling. What we were doing was we were getting engineers involved. We were getting outside consultants involved on how this will be permitted. We were getting people looking at water and hydrology and all of that. And, over those 9 months, what were we doing in the background? Well, we were putting this PEA out. What is this PEA? Gives us a mine plan to work out of. And that mine plan is actually informing the drilling that we just started on at the end of July. We're not just converting to M&I random ounces throughout the property. No, we know that there's a 2.3-year payback as outlined in this PEA. Well, guess what we're focused on converting now? We're focused on de-risking through those early years of production, converting those ounces first based off of that mine plan. By taking the time to let the project actually develop, so you can get a methodical understanding of how this is going to grow, how you develop it, that makes the drilling less random. That makes it targeted. So that's the focus this year. We've got 40 drill holes, de-risking our ounces through the production period. It's going to be a no-brainer. What do we know in the early years? Well, that PEA outlines that this is and what we're drilling into right now, this should be the highest head grade structure in the industry when all is said and done. Our PEA outlines that in our early years of production, we'll be mining a stope that's going to be roughly a kilogram per ton silver equivalent. There's nothing like that in the industry. So we're drilling that out, and we're going to be, our first drill holes in 2 years are going to be focused on the highest grade structure, tightening that up. And then we've got a lot of upside that we're focused on now too, because we see, our mine plan shuts off right at the corner of the DPB area. And we actually orphaned a 12 million ounce deposit from the PEA that is part of our resource that's a kilometer away along the same vein corridor. Well, guess what? I'm not focused right now just on adding random ounces. We're focused now on adding mine life. I think we can take this 8-year mine life, which granted might seem small depending on, irrespective of how high margin these ounces are going to be in the context of just the cash flow you're looking at. But we think we can add another 3 to 4 years of mine life, literally increasing our mine life by 50%, while the capex will stay exactly the same. So this is going to be a fun year on the drills looking for us, but we had to take that time off, to take that foot off the gas pedal, to let the engineers in, to develop a plan so that our conversion program, people will follow that in real time. The upside, they'll be able to know that it's not just random ounces, but it's mine life you're adding. And after 2 years out of the spotlight, this PEA is a palate cleanser for the market. This PEA is a rallying call for every analyst that doesn't cover us now they have to cover us. There's not that many development stage projects in the world, and most don't have the economic profile that ours will have. So, we put this out, the PEA out a week before Beaver Creek, and what happened? The big banks analysts started calling. We did a site visit right after Beaver Creek with a handful of analysts as well that don't cover us that now sort of have to, just because we've made their job very easy. So after being out of the spotlight for a long time, we're ready to take center stage again, and we've got about 50 drill holes will be completed between now and the end of the year. And with the Sprott financing, we're going to keep the pedal up to the metal, adding more mine life next year too.
What's your target for expansion here, by the way, with this drill program? Like when you move the resource from inferred into measured and indicated, what's your internal goal for the size of the project? How big do you think it's going to get?
Well, we think, if we can drill, if we're successful on drilling out this 1 kilometer, I'll put it this way, a easy paint by numbers reference point for a project is from the last operating mine in the district, which is right where a property starts. It's a vein corridor. It sort of moves east to west, but it's got some, northerly trend to it as well. We've drilled out, as the crow flies, 4 kilometers of strike on this one cohesive, intact vein corridor, the same vein corridor which they've produced 200 million ounces of silver and 2 million ounces of gold in 30 years. Now, internal to that 4 kilometers, we've got 3 different areas we've drilled out. If you take those three different areas, that equates to 2.5 kilometers of strike. Internal to that, I've got 1 kilometer gap. We think that alone, that 1 kilometer along maybe five different veins, will add another 30 to 50 million ounces just there. And you can't get more straightforward drilling than that, because we've got the deposit here and we've got the deposit here. We stepped out in 2022 1 kilometer along this vein system and hit this northwest step out deposit, as we call it. We don't have 3 different deposits when all is said and done. We've got one big mine. So on this round of drilling, if we can get enough drill density into this kilometer trend, that's going to be another 30 to 50%. Not only that will bridge the gap to that 12 million ounces that we omitted from the last mine plan. Now, when you factor in dilution into all of that, you're probably looking at maybe 4 to 5 years more of mine life. And once again, I'm not expecting our capex to change all that much. Maybe it'll move up with inflation ever so slightly, but we're happy with our 1,500 ton per day mill. Our cost to go underground isn't going to change. I don't think the early years of our mining plan are going to change, but if we can just add more mine life, just expanding onto the drilling easy mine expansion style ounces onto the same one development, that's going to blow out the economics on our next PEA, which we're hoping to have sort of be in that position towards the end of next year. It'll blow out our ounces too, but once again, I'm not interested in ounces. I'm interested in how this plays out in terms of a mining operation. And between this year and next year, we're all, right now at $1,900 gold and $23 silver, we're at a 2-to-1 MPV to capex. If we can bring on 4 or 5 more years of mine life, that's going to change wildly. But we've got a very, very clear path now. It's easy to understand, and there's a lot more life that this district's got to give.
Well, within the framework of thinking about this as a potential mine, vein narrowness and continuity is always top of mind for me when looking at projects in Nevada. And the veins in the current resource average 4.2 meters in thickness, which isn't all that thick, especially considering sometimes they can be only a few centimeters thick because they pinch and swell. So what's your internal expectation for the size of this veins on this drilling? And is there a point on your land package where you expect veins to be swelling more, or where you can add on more ounces?
Veins always pinch and swell. What's nice about a PEA, you can there's about 20 different ways to hide the ball in terms of how resources are presented, for example, but there's no hiding PEAs. Our PEA, everything in there, it fits within a stope, right? It has to fit within a mining scenario. So our project itself, 4.1 meters, okay, that's at the grade we've got is plenty. The smallest piece of mining equipment you can get underground is about 1 meter and 1.4 meters. So for all of our resources along the way, we got penalized for this because a lot of our peers don't constrain them the way we constrain them. We only model down to 1.5 meters thickness, because if you're modeling any less than that, well, that's a good way to jack up your average grade. But if the smallest piece of mining equipment is 1.5 meters and you're modeling to a 0.5 meter thickness, that's smoke and mirrors. There's going to be a whole bunch of excess dilution in there. With ours, 1.5 meters, and all of our resources going into this PEA were block diluted grade. Now, none of our other high grade peers present that way. So we factor in dilution into every one of our resources, whereas our others don't. So if you look at that slide in my slide deck, it shows the enterprise value ounce in the ground valuations, and we've separated it out by grade amongst every large silver rich project in the world. Now that's based off of how the grades are presented in the resources. But if we factored in dilution into our resources, but our peers haven't, well, it sort of looks like we're neck and neck with the other two high grade stores you mentioned in terms of how the resources are. But when you look at the head grade you're mining, once you get to the PEA, that's where you can find out where the Emperor has closed and where it doesn't. Our head grade is 570. Whereas it looks like we're even with our next closest peer in terms of resource grade, that's not true. They have to factor that dilution into their mine plan in terms of what they're recovering, in terms of their head grade. Well, if they factor in that dilution down line and at the point where they're putting out a PEA, all of a sudden what looks like similar grade stories change markedly. Our next, we're 55 to 60% higher grade, higher head grade, what you're actually mining than our next closest peer, despite how our resources are presented. So in terms of mineability, yeah, well, that's all taken into account into our PEA. It's our project's perfectly amenable to conventional underground mining methods. So it's about 75% long hole stoping, which is nice and cheap actually. And then the rest, the other 25% is cut and fill. And that's also very straightforward, very conventional. And it provides us the added bonus of being able to re-inject some of our dry stack tailings underground for rock stability. So it's a nice straightforward operation that we're envisioning. In terms of the expansion drilling we're doing right now, I mean, that's why we drill. All I know is that this is a system. This is a vein corridor that 100 years ago was one of the richest places on Earth. And it's the same veins they were mining. We're just stepping out along that extension. So we'll drill. Ask me in 4 months, but I think we'll never have an opportunity to add more ounces quicker and cheaper than we've got over the next 12-month period. I'll put it that way. Like, it's predictive style drilling.
The Tonopah district is also heavily faulted. So to your point of it being predictive, that faulting could add to the structural complexity, but it could also offset some of the veins, which again tend to pitch and swell. And so that makes chasing the veins more challenging. So how are you dealing with that? Do you have any structural geological techniques to understand these offsets and locate potentially displaced portions of those veins?
Yeah, well, we found the offset. Yeah, you're correct. There's a lot of geological activity going on down there. I mean, that's what makes this district so unique. Tonopah historically, it's second to only the Comstock lode in terms of silver production, but in terms of silver gold ratio, what they pulled out at Tonopah and what we drill, like what we see in the drilling, it's 100-to-1 silver gold ratio. There's nothing like it. This is the reason why Nevada to this day is known as the silver state. It's the queen of the silver camps. The king would have been the Comstock, but this is way more silver heavy than anything else down there. Now, what we found early on, the old timers thought that it was just simply an east-west trending vein corridor. They made the discovery, as you mentioned, Jim Butler, his mules ran off to this big outcrop on the east side of the district, which is where the town of Tonopah is today. And they started mining these super gene and rich veins right from surface. And the old timers did no drilling back in the day. They followed the veins along strike, underground. If they lost a vein, if there was a fault, they drift across until they found it, and then they keep mining again. So all of that historic production started on the east side of town, and it went to our side, and it looked pretty straightforward, just east to west. Going into that, obviously the understanding of geologic and structural controls and all that, developed a lot, especially with epithermal districts since our mine shut down in the mid 1920s. And what we figured out early on is it's not truly an east-west vein corridor. The mineralization is following along the inner edge of a caldera margin. So, picture a blow off top of a volcano, just like my coffee cup. The veins want to just follow the edge of that internal of the caldera margin, and we had that insight early on. So what happens is, it's the last vein was here. We were able to get a lot of drilling into it early on, but we couldn't really piece together things on an east-west basis. And then we realized the caldera started swinging up to the northwest. And all of a sudden in 2021, 2022, when we realized that the orientation is going to go from this to this, we stepped out 1 kilometer and we hit it up there. Now, we've got a good handle. We've got drilling on all sides of where the faulting is. We've got a good understanding of that. So yeah, there are definitely areas where things are offset, but that's all taken into account at this point. And really, that caldera theory is fantastic for us because we've got, one of the nicest things about our project. Nevada is a good place to be in the mining industry, but private land in Nevada, which our entire operation is situated on, means that there's no federal government involvement in our permitting process whatsoever. So what might take something 5 to 10 years in Nevada to permit if it's on BLM land or federal land, with us, once we get to the point where our baseline surveys have been done, our water, our air quality, and a final, I guess, engineering design is submitted, you're looking at 12 to 14 months. So what's nice is our patent claim block goes up to the northwest and we can follow. We've got, this drilling we're doing right now, yeah, we're doing a couple step outs because the system's still open to the northwest, but it's going to keep going. We've got once again, our understanding of this district has emerged rapidly since we started just 4 years ago.
Are there still parts on your land package where you can find mineralization closer to surface? Again, given historical workings probably, again, already looked at a lot of this ground, or how deep do you think those holes are going to be, specifically the 10 holes that you're doing on step-out drilling?
Yeah, our step-out drilling is what we find is that right along the edge, the inner edge of the caldera, is where the highest grade structures are, and it's where they tend to be the shallowest. So we're definitely following up on near surface mineralization as we speak. That's not part of it is resource expansion drilling. It's outside of the shell, but that's actually outside of our shell in the early years of production to the southern edge of our DPB where the decline's going to go first. Our highest grade intercept of the project came at the end of 2022 where we hit, I think it was 6.5 kilos over 1.5 meters or so. And that was around 200 meters. The payload top to bottom at Tonopah, it's at least 400 meters top to bottom. Our Victor mine, which is at the very northeastern side of our land package, that was the last commercially operating mine in the district. And the old timers mined that down to around 1,880 feet before they flooded out the mine and had to shut things down. But where they stopped mining there, the vein kept blowing out as they went deeper and deeper. But so this is a project that's going to grow in 3 dimensions, not just along strike, but if we can get underground and keep drilling at depth, it's going to be there's going to be ounces out of there. In terms of the near surface stuff, we've got 40 drill holes de-risking through our initial payback period. So we want to de-risk through the first 3 years or so of production. But if we can also get our capex down, or at least lower the cost it'll take to start mining by drilling near surface, then outlined in this PEA, that's going to cut down the cost and blow out the economics as well. So we're chasing mineralization near surface as we speak. In fact, some of our first drill holes that I think we're going to be releasing in the imminent future are targeting the shallowest portions of our property where there's no mineralization to date has been reported.
Well, speaking of historic workings, part of the historic production on this project was also underground. So it was not only was not only surface work, if I remember correctly. Could that be a risk for your exploration efforts, as in encountering underground cavities or something like that while drilling and causing loss of core?
So no, that it's challenging to drill. Victor, for example, that was the last mine in the district, and that's to drill that out to get to where we've been, we've had to navigate across 5 different levels of workings. Like if you bottom your drill hole in a working, you lose it. But this is true. The company that consolidated this land package and was like, it was a big time mining company in the 1910s and 20s. It was called the Tonopah Extension Mining Company. And they named that company very correctly because that company effectively went into Chapter 11 at the start of the Great Depression. It went into Chapter 11 because they flooded out their mine in the mid to late 1920s, and took out a bunch of debt to fund some heavy duty diesel generators and some water pumps to be built and shipped from Europe. By the time they were shipped over, it took a couple of years. They'd stopped mining, they installed them. The Great Depression happened, silver just tanked, and they couldn't pay back that note, and the company went into Chapter 11. We're literally picking up from that extension. There was no mining beyond where they left off on that northeastern portion there. So it's literally, we're able to piggyback off some cost savings for the PEA. We're able to open up some of the old historic shafts and use those for ventilation and things like that. And certainly having those workings there, that was the original map that we used to target our early drilling. We didn't do any geophysics. There's nothing at surface. We figured out a good place to start from would be where they finished off from. And now we are. So the vast majority of our project is virgin territory. It's completely, we're not remnant miners here. We're not focused on just like reopening old mines. No, we've got 4 kilometers of strike beyond where that last mining was. So it's sort of the best of both worlds.
Hmm. And you also have the water rights to complete this round of drilling and everything. Like that's not, you don't think that's going to be a challenge, or how does that work for you on
Yeah,
private
well, we're
land
in
in
the
Nevada?
process of establishing or affirming our water rights right now. These are patented claims, and really, our discussions with the state are that all we have to do is show that the old timers used the water for processing at their projects, and then effectively we'd be affirmed those rights now. There's no shortage of water in Nevada, but water rights are scarce. If we think we'll have no issues effectively pumping out the water, especially from our Victor area, and re-infiltrating that, using that for a processing um, uh, facility. So it's a really closed loop system we've got here, and I think we're making headway there. So I think that's one of the better things about the project is that we think that the water rights are ours, and that's just a matter of just going through the historic records and showing it. They did. I mean, there was old stamp mills on our property which were using the water. In fact, the water from Victor that was being pumped out in the 1920s, they actually had a neighborhood swimming pool, which was actually just the pumped out mine water, and it was warm, and kids and stuff would swim in it. I guess that was before they knew about heavy metals and all of that, but we think we're on the right track there.
Hmm. What other permits do you need to move forward? Is it only the water, or what does that look like?
Yeah, well, you do. Well, you do water quality, you do air, you need rock stability. So, geotechnical drilling. That's all stuff that we're using this PEA effectively. This PEA is done in pencil, not in pen. I mean, I think the next year or so is going to be meaningful. We're going to, I see the center of gravity not being necessarily where it is now, but actually moving up to the northwest. So that may, the location of where we put our dry stack tailings, for example, may change as things keep moving to the northwest. I think our decline will most likely stay in the same place because that's the shallowest portion of our property and the highest grade structure we've got. But that may also change. I mean, we may hit some things we're not expecting. We might tap into a near surface shoot on this kilometer of strike we're drilling out now. So, but what this PEA does is it allows us to use that as a roadmap for all the other test work, all the air quality, all the water. We're doing geotechnical drilling as part of this rock stability characterization, all of that, so that by the time we're ready to submit a more finalized engineering plan, a finalized mine plan, we'll have those, year or two worth of benchmarking on the water and air side that it'll be presented with, a nice little bow And from there, once that submission is made to the state and county, it's about a 12 to 14 month process after that. So we'll, if a mid tier were to come in and buy us today and money wasn't an issue for them, you could be producing in about 40 months here, start to finish. So our Lassonde curve isn't a typical Lassonde curve where you're in permitting purgatory. It doesn't matter if Harris wins or Trump wins. Federal government has no say. Nevada is the only state in America that has their own EPA. So very constrained Lassonde curve on the development side. And even though we've got a PEA, the amount of ounces in mine life that we think we'll be able to add in the next 12 months is going to be unlike anything we've had before it. So,
is the local community or everyone that has a potential claim to your ground or something like that, is everyone happy? You don't have to get any special agreements in place or anything else?
the town of Tonopah is there because of the original silver and gold discoveries, right? In terms of what's nice about ours is ours will be a very small footprint, high octane underground system. You're not going to see much in the way of surface development. And where we are, we're about 2 kilometers. I guess our mine decline would be about 4 kilometers away from the town. And the town is sort of cut off by this mountain called Brower Mountain. So like all of our entrance, our operations are going to be behind that. So cut off from the town. And then the other benefit they have is like we're close enough to the town that you get all of the benefits of having that infrastructure there. There's power, there's water, there's roads. US Highway 95 that cuts from Las Vegas to Reno cuts right across our property. So really the only thing at surface on us are some, there's a Burger King, like it's right along the highway there, but we control 100% of the mineral rights and then probably 95% of the surface rights. And if you look at a satellite picture of our map, and there's lots of them in our slide deck, like there's nothing else there and it's flat and it's easy. So it's the best of both worlds. Like Tonopah, like Esmeralda and Nye County in Nevada are like the two most gung-ho mine counties in Nevada. And to put it this way, from a permitting perspective, directly south of us, directly abutting our project, are BLM claims. Those BLM claims have the Three Hills deposit and the Hasbrook deposit. Hasbrook and Three Hills is going to be a bulk tonnage heap leach mine. They've got federal government permits in hand. That's a shovel-ready project, and that was federal oversight, not local. Ours is just local. So if a bulk tonnage heap leach operation can be permitted and be ready to go, ours on private land, a small footprint and a huge boost to the local economy is going to be as straightforward as it gets.
Good. Well, Andrew, I didn't get to ask you all the questions that I wanted to. So maybe next time we'll book some more time to go through some of these things, because I also wanted to talk about the Silver Cloud project and the lithium stuff that you've been coming up with. But we have to work towards wrapping it up here in a couple of minutes. What's very important right now? What am I forgetting to ask you? What do you think we should cover here at the end?
Well, listen, it's always nice to talk about other projects, but on an intrinsic value, just on Tonopah West, we're undervalued based off of every peer comp you want to look at. But the market's waking up. Like we moved 40% last month. We did 2.5x the volume last month than we did in August. We had an endorsement from Eric Sprott, who's written $10 million worth of checks into us just since June. And this last deal he did was above market and no warrants. There's still a mismatch between what we've got. I don't like enterprise value, ounce in the ground metrics much, but they do sort of show how the market values the economic potential of our ounces. And after last year, when we put out our last resource and we 2.5 extra ounces and got 100 million, and we fell like a rock because I didn't 2.5x our stock price after that. It showed to me that the market valued my ounces as being more marginal compared to the other high-grade stories. Now, I knew the market, that's an understanding gap, and that's what we set out to prove with the PEA. The PEA shows these are going to be some of the highest potential, highest margin ounces in the industry, and we're not in Mexico, we're not in Argentina or Bolivia or Russia. Private land in Nevada, 55 to 60% higher grade than our next closest peer comp, with a clear path to add ounces. So after 2 years of not drilling, you can, we'll file our PEA within the next couple of weeks, and that will be a great jumping off point for not just retail, but the analysts as well and the corporates. And from there, follow in real time the most active program we've had in 2 years, de-risking the project and adding mine life.
Good. Then that's Andrew Pollard. Sir, thank you so much for investing your time in me, and hopefully speak soon.
Thank you.